Welcome to the Chart Pattern series. In this lesson, we're going to be looking at the ascending triangle, which is a bullish continuation / reversal pattern. And this pattern usually has a horizontal flat top and a upward sloping trend line with a 75% success rate. And because of its simplicity, this pattern is one of the most common chart patterns you normally see. It usually reflects a resting period before the stock returns to its previous trend, but can also act as a transition period before a trend change. This pattern can either occur in a downtrend or an uptrend, but it almost always suggests a upwards move. And like most patterns, this can be seen on all time frames but has a higher success rate over a longer time frame. And as stated before, the ascending triangle can appear after any trend, but it's strongest when appearing after an uptrend. To spot the pattern, you want to find a stock that's making equal highs and higher lows. Once a stock has made 2 equal highs and 2 higher lows, it can be considered an ascending triangle. But an ascending triangle with 3 or more equal highs and higher lows is likely to have a stronger breakout. Now once we have identified the equal highs and higher lows, you can place a trend line by connecting the first equal high to the second equal high and extending the trend line out to the right. Then you can connect the first higher low to the second higher low and extending it to the equal high trend line. This bottom trend line will act as your support. If the ticker breaks under this trend line and makes an equal low or lower low, then the pattern is invalidated. But as you can see, you now have clearly identified an ascending triangle. And every price pattern also comes with a volume pattern. So let's look at the volume bars quickly. Now, usually the ascending triangle has a descending volume pattern as a triangle is forming, and high buy volume on the breakout. One thing to note, that this pattern is known to have false breakouts with high buy volume. It's almost indistinguishable from a real breakout. Usually this pattern has a false breakout, it tends to pull back within the pattern, then continue again to have another breakout. So now that we know how to identify this pattern, let's look into actually trading this pattern. To enter the pattern, you first have to wait for the ticker to break above the equal highs and have a candle close above it. You also want to see if there's high buy volume on that breakout. This confirms that other traders are seeing this pattern as well and are eager to buy in. After you have your 2 entry requirements, you can then place your entry. Usually once the stock breaks the resistance, it will come back to the breakout point and make that area a support. This is where you want to get your entry. Usually I tend to enter on the breakout, then add on the pullback of the breakout. My rule of thumb is to add within 1% range of the breakout. Next up, we have to determine our price target. To do that, you want to measure the move between the first equal high and the first low. Then you want to take the measured move that we just found and copy and paste it on top of the breakout point. The top of the rectangle will be your first price target. If you want a second price target, just copy and paste the box on top of your first price target. Now, to figure out your stop loss, it's really simple. You can either place it under the trend line or a bit under the previous low. And when the stock makes a new lower low, it's just the trend is changing to the other direction. And there you have it, you know how to fully trade an ascending triangle. I hope you enjoyed, and before that you go, I also want to post a quick recap that you can always look back at whenever you need to know how to trade the ascending triangle.